So let's begin here as we usually do with the S&P, and let's just start looking at some of the factors that I touched upon in the introduction. So just to recap, obviously we've had a pretty strong downdraft that came from the touching of the top of the channel and then was accompanied by tariff news somewhere in here. And what's, I would say, kind of typical and at the same time atypical of this down move, I think I'll start more with the typical, is the fact that it's happened so many times before, right? In the last few years that we've had strong moves down only to be bought back up, and those strong moves down have taken immense amounts of value out of the market in just 4 to 5 days that would normally take much longer. If you look at the distance of this decline, this is 3027 down to 2800. It's just under 200 points. And if you look at this move here, this is 2952 to 2725. So just over 225 points. So it's roughly the same from here and then here. You see, and that's the thing. You can see just how long this took, how many sessions there are, and yet this is 4 sessions in here. So we've seen this movie before. The question is, of course, is this the start of something bigger or not? So obviously one of the simple tools that I look at all the time, and you know that I like to keep it very simple using things like Fibonacci and trend lines, etc. And the reason I like to keep it very simple is because when you keep it simple, you can't fool yourself with a lot of mumbo jumbo. That's the thing. It's very, very real. It's very visceral. It's very in your face, and you really can't fool yourself. And it makes the decision making process that much easier. And that is, of course, what is of paramount importance in trading. 50% fib and 61.8. This is where we need to focus right here. So you can see the most recent rally over the last couple of days of the week crossed the 50. Then the next day, which is the inside day, we're going to talk more about that when we get to the market profile portion of our presentation, didn't close above the 50. All right, leaving the all-important 61.8 above us to still be touched. So this is very, very key in the next few days. 29.49, let's call it 29.50. It is a big round number, 29.50, and that is going to be very, very key. If a bar, that is daily bar, was to close above the 29.50, that takes back, I shouldn't say takes back, but it doesn't negate all of it, but it really takes a lot of the wind out of the sails of this down move. And for all intents and purposes, I'm a big believer that once you cross above the 61.8, the odds are pretty strong that you'll go all the way. When I say all the way, that means that we could go here. Now, let's look at the other majors that I look at and see what they're looking like. NASDAQ 100 looks relatively the same. Closed above the 50 on Thursday on the big rally, then below. Still has the same 61.8 here left to touch. You may want to write down this number here. It's an easy one to remember because it's 7771. So 7,771 in the NDX is that 61.8 fib retracement. And last but not least, the all-important rut, which is still showing relative weakness, I would say took back more of the prior day than the others, went deeper into range, kind of passed half back, and more importantly, did not even get to the 50. Notice that that's around the 1535 level in this sort of risk-on, risk-off index, as I call it. That's really tells us whether it's risk-on, risk-off, and the rut is still pointing to risk-off, I would say, for those two reasons, not even getting to the 50, and also this retracement on Friday being somewhat a little bit deeper. All right, let's take a look into market profile now and see what that can tell us. There's also some information here in the profile that I want to share. I am, of course, recording this video on Sunday night, so you can see these futures moving here on Sunday night. We opened up at 6 p.m. here, as we always do. This is Friday's close on the the Friday settlement, which is in the middle of the range. But before we get deeper into that, I want to look at some of this structure here, namely this day here on Thursday, which closed at the high, and this was really very, very poor structure. And this is important to carry forward, but it's also very important not to put too much weight on it. A lot of times these poor structure days, which are very, very indicative of short covering, there's a lot of emotion. If there wasn't emotion, there wouldn't be all these single prints, and you wouldn't be divided into these little mini distributions like this. That's 2, that's 3, and that's 4, And believe it or not, there's even a fifth one right up in here. Okay, this is very, very emotional when you have all these single print areas in between, because those are, of course, areas where stops are just getting blown through and people are just buying crazily out of momentum, and nobody's really forward thinking. It's all just like, basically, get me out of my shorts right now as fast as you can, because I don't want to be short anymore. Now, as I was saying, you don't want to read too much into this, because larger moves can often, they can and do often develop from these poor structure days. When you go back to look at where the beginnings of rallies are, a lot of times you'll see this poor structure, because of course old business gets taken care of before new business, right? Which is short covering, so that makes sense. And so oftentimes those first days of a rally are an immense amount of old business, and then the new business, which is the new money buyers who want to hold a little bit longer, they come in later. Now, that being said, what you want to look at in terms of when you see poor structure in single prints is you want to see how subsequent days react in relation to those single prints. So one of the basic tenets of market profile is that you want to take these single print days and you want to divide them as if they were multiple days. So you kind of look at this as if its own day, this is its own day, and maybe you can say these two are their own day. And on the next day, you judge the success or failure of the next day's auction in terms of where the distributions lie in terms of in relation to these prior days and or the single prints. Remember that a stronger market will not get deep into the prior days poor structure. It'll just establish value higher, and that'll be the ultimate confirmation of that prior rally, or at the very least it will establish value only in the upper reaches of the prior day's multiple distributions. So in that case, if this market was stronger, we would have expected that all of this value here would more or less be contained here, or maybe here or higher. I would say no lower than here, I would say, and not really testing any of these single prints. But we can see that wasn't the case on Friday, where we filled in a lot of this area and notice that the value areas were almost identical. It's all down in here. Now, even here, and this is, I think, where it really gets dicey for the bulls, is the fact that over the course of the day, notice how much value was here. And that's the most precarious part of Thursday's distribution, really the area that has not a leg to stand on, so to speak, or that area where the foundation underneath it is so weak. This is the metaphor of building a house on sand as opposed to on a concrete foundation. This is the house of sand right here, where you see this thing. And really, it didn't hold up. Now, did we close in it? No, but that's not really what's at issue here. It's not about where you close, really. It's about where you trade through, but also when you trade there, how much time is spent. And you can see that there's plenty of time spent here in these lower reaches of Friday's distribution, which tend to confirm these prices here, rather than what they should be doing is just confirming these prices up here. Note also that the point of control volume-wise was here on a migration higher, and then on Friday was somewhat lower. So is it an all-out negatement? I don't know, that's not even really a word, I apologize. I don't think it's negatement, but negation, I should say, of the Thursday range. No, I wouldn't say all out, but it's enough to make you wonder. It's like that old song, things that make you go, That's what you got to think about. When you see it like this, you got to be like, You know, I don't know how well this short covering is holding up, especially the fact that on Friday they didn't build upon it in terms of higher prices, right? We never got any activity here. We actually, these higher prices actually cut off buying activity, which closed right at the high of the day on Thursday. And notice that the high on Friday was nowhere near it, and everything was accepting much, much lower. So if we do see lower prices as far as the profile is concerned, then obviously we would draw our attention here to these 3 days, which are down inside of the downdraft. And you can see on these days, value was absolutely unchanged. There's a lot of value here. Could it be acting as a magnet for this week's prices? It certainly could be. That is a possibility. I was pointing this out in my pre-market perspective earlier in last week, saying, look at these points of control. They're almost identical. This is where value is down here in the 2850 area. And right now the S&P cash is at 2819 or 2918, excuse me. So there is possibility that there's, if a pullback was to occur, I should say, there is potential of it. But if that pullback was to occur, where should you be targeting? This is news you can use. You should be targeting here. This is the area you should be looking for. 28.40, 28.50 in the futures is what you should be looking for, expecting that that area where the 3 points of control are almost equal is that value that you would get pulled towards. Okay, back to the chart here. So last but not least, let's talk about a couple of potential scenarios of what this market could do next week and how we would play it. All right, so first off, think of this activity here and as a two-day balance, where notice that Friday was an inside day. All of the activity is inside of the prior day. That means that the market is in balance currently, and that means that balance rules are in play. What do balance rules mean? One, remember, there's only three different things that can happen in relation to balance, or that is look above, go. Look above, fail. That's on the look up side. Remain in balance. On the downside, you can look below and fail, come back into balance, or you can look below and go. All right, so it's actually more than three things, but just think of it that way. There's obviously only three outcomes, which are up, down, and sideways, but there's also the added potential of failure, right? It's not just go up and stay up. It's either go up, fall back into range, etc. Remember, coming back into balance is a very strong signal in the other direction. This is very, very important. So this is something that we want to be on the lookout for this week. That would mean, for instance, that if we were to clear this two-day high here, go up like this, maybe tag the 61.8 and come back underneath this line, back into balance, that is a bearish signal, and the target is the opposing end of balance, which would be down here. And I think that if we were to take out this strong day here on Friday, that's a bearish signal in and of itself, and we would actually go lower and retest the lows. Remember what I said about that multiple days of point of control? Where was that? Right in the center here. This is where I think we would be pulled to if that's the case. Now, if we are to the upside, of course, there's the same potential for a balance break to the upside, so we would be looking at that two-day high, breaking out of balance. The only problem is, what have we got above us? Not too much room, because we've got that 61.8, but if it did look internally, as we were monitoring for continuation during the day, that we could go higher, then we'd have to be targeting that 20 MA. Then we're looking at 29.70 area. You can see it's at 69.07 on the chart. All right, that's what we would be looking for. Last but not least, I always pay so much attention to FANG, mainly because I like to trade them a lot, but I also do think they're kind of a bellwether for the market. They're certainly a bellwether for tech, and I have to tell you, honestly, I am not impressed. Look at Facebook. A lot of this activity, to me, feels like it was just a little bit weaker than the market, and I'm going to be watching for the exact same thing, meaning, do we take out that Thursday low? If so, I think it's weak. Amazon, I think not impressive at all. It's really almost like candles lining up same size bodies, where you can see the Friday activity took back mostly all of Thursday. I'm going to be actually looking for day trades short underneath this line here coming in. Netflix looks horrible. It's just been kind of dribbling lower. It didn't really rally with the market at all. Apple did make a doji on Friday, which is really an inside day. I'd say that's a little bit more bullish, but still has that 20 MA above it. This is very tricky here at this juncture, because notice that it's between the 20 and the 50, so you can't really tell because it's below the 20 and it's above the 50. It doesn't really tell us much. And last but not least, Google. I don't know. I really can't call it in this one. It's above the 20, above the 50. It does have quite a ways to go to get back to these past glories. And of course, there will, of course, be the trend line to deal with at some point. If it was to rally, possibly you could be looking at this 1260 area. All right.